Welcome back, dear students and scholars. This is the practice session for ASC 274 Personal Financial Statements. In the first two videos, we learned the structure, measurement basis, valuation methods, estimated tax effect, and the ASC 274 versus ASC 820 trap. Now we test that knowledge. The goal is not passive recall. The goal is to think like an exam candidate and like a professional preparer. Identify the issue, apply the rule, and avoid the tempting wrong answer. Before the questions begin, use this four-step path. First, confirm the scope. Are we dealing with personal financial statements for an individual or related group? Second, identify the statement issue. Is the question asking about the required statement, presentation, or net worth? Third, apply the measurement rule. Estimated current value, liability measurement, or valuation evidence. Fourth, check tax effects and disclosures. This path is simple, but it protects you from most ASC 274 errors. For MCQ 1, focus on the phrase estimated current value. The slide gives you four possible meanings, but only one matches ASC 274. Ask yourself, is the answer based on an informed willing buyer and willing seller exchange, or is it based on historical cost, tax basis, or personal preference? Think through that distinction now and lock your answer before moving to the explanation. The correct answer is A. Estimated current value is based on an exchange amount between knowledgeable, willing parties in a transaction that is not forced. Option B is wrong because historical costless depreciation is not the main measurement basis for personal financial statements. Option C is wrong because tax basis is used for the tax effect calculation, not as the asset value. Option D is wrong because the owner's preferred price is subjective and not supportable market evidence. For MCQ2, the key is remembering which statement ASC 274 actually requires. The wrong answers are familiar business statement names, so do not let familiarity pull you away from the personal financial statement model. Ask yourself, under this topic, what is the personal equivalent of the core balance sheet style statement? The correct answer is B, the statement of financial condition. It presents assets, liabilities, and net worth at a specific date. Option A is wrong because a statement of cash flows is not required under ASC 274. Option C is wrong because retained earnings is business equity language, not personal net worth language. Option D is wrong because comprehensive income belongs to entity level performance reporting, not the required ASC 274 statement. For MCQ 3, shift attention to liabilities. Many students learn the asset rule well and then guess on the liability side. The question is testing whether liabilities are measured at original amount, tax basis, undiscounted future cash flows, or the lower measurement required by ASC 274. Review the wording carefully and choose the answer that reflects the economic burden today. The correct answer is C. Under ASC 274, liabilities are measured at the lesser of the discounted amount of future cash to be paid or the current settlement amount. Option A is wrong because the original borrowing amount may no longer represent the present obligation. Option B is wrong because a greater of rule and tax basis do not state the liability measurement rule. Option D is wrong because ignoring discounting can overstate the obligation when time value is material. For MCQ 4, think about valuation evidence. ASC 274 is not asking for a guess and it is not asking for the oldest available number. The best evidence usually comes from recent transactions involving similar assets under similar circumstances. So compare the options based on supportability. Which answer gives the preparer the strongest objective basis for estimated current value? The correct answer is B. Recent comparable transactions in similar assets under similar circumstances provide strong evidence of current value. Option A is wrong because original cost may be stale. Option C is wrong because an owner's informal estimate is subjective unless supported by evidence. Option D is wrong because tax assessed values may help in some limited situations, but they are not automatically the best or universally reliable measure of market value. For MCQ 5, this is one of the highest value points in ASC 274. The estimated income tax effect is not limited to taxes already due, and it is not ignored until a sale occurs. The question is asking what creates the tax effect in the person statement. Look for the option that compares current values or current amounts with income tax basis. The correct answer is B. ASC 274 requires an estimated income tax effect based on differences between estimated current values or amounts and their tax basis. Option A is too narrow because it only captures taxes already payable. Option C is wrong because estate tax is not the core income tax effect being tested here. Option D is wrong because ASC 274 recognizes the estimated tax effect even without an actual sale, so net worth is not overstated. For MCQ 6, slow down mentally because this is the classic blockage factor trap. The question deliberately brings ASC 274 and ASC 820 close together. Your first job is to identify which standard controls the fact pattern. In personal financial statements, blockage may matter in certain contexts. Under ASC 820 fair value measurement, blockage factor adjustments are prohibited for level 1 quoted positions. Choose the answer that preserves that distinction. The correct answer is A. ASC 274 may allow a blockage factor adjustment in certain circumstances when a large holding could depress the price if sold as a block, but the adjustment must be supportable. Option B reverses the rule because ASC 820 prohibits blockage factor adjustments. Option C is wrong because it incorrectly says both standards always prohibit the adjustment. Option D is wrong because the issue is addressed, but the two standards deal with it differently. For short answer 1, build a concise response around 3 points. First, ASC 274 applies to personal financial statements of an individual or a group of related individuals, such as a family. Second, it does not apply to business entities, even if the individual owns a business. Third, the required statement is the statement of financial condition. Optional supporting information may be presented, but do not describe optional statements as mandatory unless the question specifically changes the facts. For short answer 2, separate the answer into basis, classification, and order. The basis is accrual, not cash basis. The classification rule is that personal statements do not use the normal current and non-current split used in business balance sheets. The ordering rule is that assets are shown by liquidity and liabilities by maturity. That structure gives users a practical view of available resources and upcoming obligations. For short answer 3, connect valuation judgment with tax effects. Specialist input may be needed for assets that are unique, restricted, privately held, or legally complex, such as business interests, real estate, collectibles, restricted securities, trusts, or jointly held property. Then explain the tax point. Estimated income taxes arise from differences between current values or amounts and tax bases, and that estimated tax effect reduces reported net worth. A strong answer shows both judgment and measurement impact. To close ASC 274, remember these 6 anchors under exam pressure. Scope, individual or related family group, not business entities. Required statement, statement of financial condition. Basis, accrual, with assets by liquidity and liabilities by maturity. Value, estimated current value based on informed exchange. Tax, current value or amount versus tax basis reduces net worth. PRAP, ASC 274 may allow blockage in certain contexts, while ASC 820 prohibits it. This completes ASC 274. Next, we move to ASC 275, risks and uncertainties. Please like this session, share it with your colleagues preparing for the same exam, subscribe to Commerce Regiment, and support the channel so we can keep building structured US GAAP education.